Okay. Hello, everyone, and thank you so much for joining us today. My name is Greg Lewis. I'm the marketing manager here at Metastock, coming at you from our satellite studio in South Texas. I know that a lot of you are dealing with some pretty horrendous weather today and yesterday. I hope everyone's safe out there. Here in Southern Texas, it's about 70 degrees outside and sunny. So there's that. Also, I think this is our first webinar of the new year. Happy 2024, and thank you so much for making us a part of your new year. I see many people are here, but nobody's really talking at each other. So go ahead and say, give us a shout out, say hello, let us know where you're, what am I trying to say? Tuning in from. I do see finally we've got our organizer on. Bobby Hiller will be hosting our event today, and our today's illustrious guest is Zaheer Anwari. He is from Sublime Trading out of the UK, and he will be talking about his new product, Marketing Advantage Toolkit, which is awesome. Okay, we do have a lot of things going on. I'm trying to think if I should do this thing over here or this thing over here. Let's talk about this thing over here. Okay, there's a lot of travel coming up for the Mucky Mucks here at Metastock. Let's see. If you are in London or Hong Kong, go ahead and check out this page, metastock.com/seminar. You will see that we are coming to Hong Kong on, I can't even read that because of my vision, on the 16th, it looks like, 17th. And we're coming to London on the 25th. You have 1 week, of course, to register for Hong Kong. To do so, just go to metastock.com/seminar and fill out this little form, and you can attend for free. In attendance will be Scott Brown, our illustrious CEO and owner, president and owner, I should say. He'll be coming to hang out with you in London and in Hong Kong. So go ahead and check that out. Also coming up, if you live in Singapore, check this out. CKE and Kelly Clement, the president of Metastock, will be visiting you on January 17th, and you can register for free for this event at metastock.com/Singapore 2024. Metastock.com/Singapore 2024. And that's not all. If you're in India, go ahead and check out this event. This will be in both Mumbai and in New Delhi. I don't have the dates off the top of my head, but they're right there, but I can't see them because, again, my vision is not so great on this particular monitor. Anyway, Scott Brown and Kelly Clement will both be there. And then also we'll have Rahul Mohindar, who is an illustrious and well-known trader out of India. So let's get back to me. All right, now we have about 5 minutes till we begin. I'm going to go offline here for a second, let you watch a video about Metastock while I make sure that everything is copacetic over here on the GoToWebinar side. Sure to please like and subscribe. Let's see, like and subscribe. That's that button. I love doing that. Make sure to like and subscribe, and we'll be right back. And don't go anywhere. Thank you so much. Well, that's not the button I meant to push.
Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the power tools. the Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, I hope you enjoyed that little presentation. Hey, we're going to be starting here in about 1 minute. God's broadcast willing. We do have our guest and we do have our host, and they're ready to roll. Once again, don't hesitate to like and subscribe and ring that bell so you'll be notified every time we have a new live stream like this, which we typically do once or twice a week. We also have full day events, and we have multi-day events and full week events, and you don't want to miss any of that. That's great stuff. You got about 25 seconds. If there's anything else I can think of, other than just to say, go ahead and please interact with us. Oh, hello, Ramniwas Kaudhari from India. I beg your pardon. I'm certain I slaughtered that name. And hello, Maverick G. Thank you so much for joining us today. Hey, we're going to go ahead and get started here. You all have a great day and successful trading.
All right. Hello, everyone, once again, and welcome to another Metastock webinar here. I'm Bobby Hitler with the Business Development Department here at Metastock, and I'm just here to kind of host today's overall session, but really you'll be spending the majority of the day with our partner and my friend Zaheer. Before we dive too far into things, though, I do quickly have to go through our disclaimer here. Don't worry, it won't take long. But today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Metastock does not endorse the purchase of any security, nor are we paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or a solicitation to buy any security. All right, now that that's out of the way, I'm also going to be getting out of the way here so that we can have Zaheer come on. I know Zaheer's in the room with us. Hi, Zaheer, how are you doing?
Hi, guys. Hi, Bobby. Thanks for having me back. Happy New Year to you all.
Yeah, we're always glad to have you on. And hey, I'll say it in front of everyone. Thanks so much for that pen that you sent to me and a couple of the other guys here on the team. We really enjoyed the new fountain pens. They're fantastic. You're fantastic. I'm excited for the presentation that you're going to have here for us today. I'm actually going to go ahead and kind of just get out of the way here and make you the presenter and let
Brilliant.
you take it from here.
Fantastic.
All right. So you should have received a request there.
Okay, you should hopefully be seeing my title slide there.
Yep, I see your title slide and me here, so I'll go ahead and turn off my camera and mute myself, and I'm here in the background if you need me.
Fantastic. All right, thank you. Thanks again, guys, everyone at Metastock. Thanks for having me here. Very timely presentation, I guess, or an opportunity to do this presentation right at the start of 2024. So just once again, wishing you all a very, very happy new year and, very productive and prosperous 2024 ahead, which, if we follow the signs of what is happening in the stock market, we could be in for a bumper year ahead. I would say last year was a bumpy year. 2023 was a bumpy year, which caught a lot of people off guard. But 2024 is setting up to be a bumper year. And so now is the time to really get prepared for the opportunities that could be ahead of us. So I'm going to keep it really simple today, guys. And this is what I want to cover. I want to cover what happened in 2023, potentially what you guys missed in 2023, the outlook for 2024, and using the MAT, the Market Advantage Toolkit, that's our add-on for Metastock, to absolutely smash through your 2024 goals. So let's dive straight in. What happened in 2023, guys? The reality is that the stock market fooled virtually everyone in 2023. If you remember going back to the start of last year, failing banks were all over our media channels. And that really set the tone for the misinformation that we found everywhere. Literally every morning we would wake up and all we would seem to hear about were failing banks. But here's the thing. Images like this as well at the start of the year never, ever help. We always get the analysts, the so-called experts, putting out their predictions of where the S&P 500, where the market is likely to be at the end of the year. And what you will find is that they are almost always wrong. Ultimately, what these are opinion pieces. And one of the first rules of investing or trading, good in trading, is to ignore opinions, including your own. Opinions will always get you on the wrong side of the market. And this screenshot is a perfect example. Every 3 months, every 4 months, you'd have these analysts sort of adjusting their initial calls because they were finding themselves on the wrong side. And by the end of the year, they got it totally wrong. So we've got to be better than this. We've got to be savvy about the way we approach the market. And one of those first rules is ignore what's happening on our media channels, ignore opinions, including your own, and really just focus on what the market is telling us. Also, images like this never help. I found this particularly fascinating. 72% of stocks in the S&P 500 underperformed against the index last year. That should say last year because it's an image from last year. So that's from 2023. 72% of stocks in the S&P 500 underperformed the index in 2023. But here's the thing, let's flip it, guys. That means 28% of stocks in the S&P 500 outperformed the index. And if you work that out as a percentage, 28% of 500 is 140. If my maths is correct, there's 140 stocks. That is a huge number of stocks to pick from. And if we can pick 5 to 10 of those stocks from those 140 that are outperforming the index and hold and compound those stocks over 12, 18 months, you will totally outperform any other investment vehicle out there. You will outperform the market and you will outperform any other potential investment opportunity out there. So we really got to be smart. We've got to be able to look through this data and we've got to be able to make savvy decisions. Now, here's the thing. Who wasn't fooled in 2023? The answer, trend followers. Investors and traders who simply follow the market. Now, trend following is as old as the financial markets. It's an approach, it's a style of investing that has topped performance tables for decades. You look at performance tables, you'll find Richard Dennis and William Eckhart at the top of performance tables. They're the creators of the turtle trader experiment. If you're unfamiliar with the turtle trader story, I highly recommend getting up to speed with that because the turtle trader experiment is really the foundation to what we created here at Sublime Trading. It was the complete inspiration for me when I read Way of the Turtle by Curtis Faith. When I read that book in 2006, 2007, it completely changed everything for me. So I highly recommend reading that book, guys. But ultimately, trend followers are people who follow the market. They put their opinions aside. If the market is bullish, they remain bullish. If the market's bearish, they switch and they become bearish over the long term. Now, here's the thing. Going back to sort of January, February 2023, when everyone was getting the fright put into them with all the talk of failing banks, us here at Sublime Trading, we started buying into the stock market. So we were doing precisely what the media was telling us not to do. We were taking a position against all the top calling that was happening. You go back through 2023, go onto sites like LinkedIn, all you will find are just people calling tops. The market can't go any higher. And it just kept on going periodically higher and higher and higher and higher. And every time it went higher, they would come in and say, oh, it can't go any higher. And they ended up just being on the wrong side of the market. They completely missed the 30% plus move that happened across the indices, which by the end of the year ended up with the Dow Jones and the Nasdaq printing new all-time highs. It's just the S&P 500 that's lagging behind at the moment. Why did we do this? Because that is what the stock market dictated us to do. We didn't question or form opinions or do the opposite, which is start picking tops. We simply followed. Here's a pro tip, guys. Be a good kisser. Now, what do I mean by that? KISS is an acronym. Keep it simple, sweetheart. It's the simplicity of good investing that eludes people. I'm sure you guys are familiar with the expression, with the quote by Leonardo da Vinci, simplicity is the ultimate sophistication. It really holds true with good investing. The less you try and form opinions, the less complex you make it, and the more simple you keep it, the more money you will make. And ultimately, real life-changing sums of money. I'm not talking about a bit of change. I'm talking about wealth creation here. So as I said, it's the simplicity of trend following and sound investing that eludes people. Now, our job as investors is to find and maximize profit from the strongest trending stocks from the most robust sectors. If you can't do this, you're not an investor. This is your job. Look at what you do right now. There's a way, your career. I'm sure there is a definition for what makes someone good at your particular career. This is my definition of what makes a good investor. A good investor is someone who can find and maximize profit from the strongest trending stocks from the most robust sectors. Ultimately, we're looking for stocks outperforming the indices. Now, here's the thing. Why do we want to invest in stocks outperforming the indices and not settle for, say, an S&P 500 tracker fund? Well, let's do some maths. Let's say we have $20,000 roughly starting amount. We put $20,000 in a tracker fund. and we put $20,000 in what I'm going to show you today, which is investing in top performing stocks, trending stocks. We do that for 20 years. In addition to that, we add an additional $100 a month to the pot. Guys, excuse me if I am coughing a little bit. I've been battling with a sore throat and a dry throat for the last 2-3 days. So I will be sipping on water periodically as well. So let's say the average annual return with the S&P 500 is 11%. And let's say with the stocks outperforming the indices, we're averaging 30% a year. Now, if we do the maths, after a 20-year period in an S&P 500 tracker fund, you're looking at over $250,000, which in itself is not a bad amount of money. Simply by holding a tracker fund, setting up a direct debit, set and forget, leaving your money in there, it's not a bad return for doing the bare minimum. I mean, the banking system is not going to give that to you. So at the very least, this is something that you should be looking into. But as I started understanding this process myself, I then thought, why would I settle for the average when I could invest in stocks performing better than the average and exceed the average performance of the S&P 500 tracker fund? And by doing that over a 20-year period, you can see that the sum of money you will be rewarded with is significantly different. You're looking at $4.5 million. So that's a massive amount of difference for not a lot of extra work. You've just got to learn the process of finding the right stocks, investing in them, and managing a portfolio. Now, ultimately, what is a trending stock? What is it that I'm looking for? Now, over the years, there have been many ways of counting waves, if you like, in the market. A famous way or one of the more sort of common ways is Elliott wave counting. Now, the problem with some of these methods is that they're extremely subjective. You put 10 Elliott wave enthusiasts in a room and you give them a chart, they'll all come out with different counts. So I found a method that was far simpler and that removed almost all of the subjectivity. There's still a certain element of subjectivity. You can't completely remove it. But when you've got a system like this and you can remove, let's say, 95% of that subjectivity, it makes the process far simpler. So for me, this is what I'm looking for when I'm looking for trending stocks. Ultimately, a stock moves in 4 waves. You've got phase 1, which is proven performance. So what I mean by that is I'm looking at a stock that has performed well in the past. If it's performed well in the past, then it's very likely to perform well in the future. Then I'm looking for a stock that creates a consolidation base. So a base is a sideways market. Think of it as the roots of a tree. The longer the bigger and stronger the roots are, the taller the tree will grow. Same with a consolidation base. The longer the consolidation, the bigger the breakout. So I'm looking for a consolidation base of at least 3 to 6 months, maybe even longer. 3 to 6 months is the very minimum. I'm then looking for a breakout from that consolidation. And ideally, that breakout is printing new all-time highs. So stocks that are printing new all-time highs will move the quickest over 12 to 18 months because there's no level of resistance above price or a ceiling above price that's going to force the stock down. That's part of the challenge when you're investing in undervalued stocks. So if you use the Warren Buffett approach, where the stock is dropping in price, and then you buy that stock and you want it to start reversing up. First of all, that is a classic way of landing in the catching a falling knife scenario. So when a stock is dropping in price, it's only likely to continue dropping. What you're looking for is a stock that's already moving up. You just want to get in right at the start of its move up, and then you want to ride that whole move up. This is where trend following is far superior than value investing. And this is why trend followers are found at the top of performance tables. Warren Buffett, Benjamin Graham, Charlie Munger, rest in peace. They're all mid-table investors. But all you ever hear about on our media channels are pictures, and you see our pictures of Warren Buffett and all his philosophy and his quotes. Yet you never hear anything about Richard Dennis. So when a stock breaks out from a consolidation and it's printing new all-time highs, that is a stock that is likely to move very, very quickly over the next 12 to 18 months. And that is phase 4. That is where we want to get in. So phase 4 is where we want to enter, and we want this particular trend to last 12 to 18 months. So what I created was a system which is called the Market Advantage Toolkit, the MAT, that does all of the hard work, does all of the legwork to find all of these stocks that are entering phase 4. And those are the stocks that we want to enter into our portfolio. So we've gone through what happened in an overview of what happened in 2023. What I want to do is show you this in chart form. So I'm now going to switch over to Metastock, and I'm going to start with the Indian stock market for a very good reason, because the Indian stock market and what happened in India last year is a very good example of what is setting up to happen this year. So I'm just going to switch over to Metastock. Bobby, you may have to come in and let me know if you can see my screen. Where are we?
Yeah, I don't see it yet.
Okay, sorry, excuse me. Bear with me a second. It doesn't seem to allow me to want to do this. Just give me a second, guys. All right, let me just come out of here. This might be easier. I have no idea what's going on here. Okay, how about that?
Yep, I see Metastock now.
Okay, brilliant, guys. Right, apologies for that. Okay, so we're going to start with the Nifty. If you're unfamiliar with the Nifty is simply the index, the main index of the National Stock Exchange of India. It's their version of the S&P 500 or the FTSE here in the UK. And what I want to do is I'm just going to compress the chart a little bit just to bring in more data. First of all, I just want to go through those phases that I talked about earlier. So if we look at this decline around coronavirus, we had this nice run to the upside. So let's consider that phase 1. Then we have this sideways market, which we can consider phase 2. We had a breakout here, which is the phase 3 breakout, and that was in June of 2023. And then since then, the market has continued to new all-time highs. So if we're looking at the sort of run up in the Nifty, you're looking at a move of around, let's see if I can grab that. You're looking at a move of around 15-16% in the Nifty when it printed new all-time highs. If you want to see the actual run to the upside, the actual bull run, you're looking at a move of around 28%. So 28% was the overall run to the upside in the Nifty. When it actually broke out and started printing new all-time highs, you're looking at around 15 to 16%. Now, as I said earlier, I don't invest in the Nifty. I don't invest in indices. What I'm looking for are stocks outperforming the indices. Now, what we have here in Sublime Trading, our community, is a growing Indian community. So we got a community where we share a lot of the US stocks and the UK stocks, and we guide people in putting a portfolio around those markets. But we also have a growing community in India based around the Indian stock market. So what I'm going to share with you guys are all the stocks that we shared with our community members through 2023. So as the Nifty started pushing up and printing new all-time highs, now bearing in mind that the Nifty moved up 28% and it moved up 15% when printing new all-time highs. What I'm going to show you are the stocks that we found and that our Indian community members invested in outperforming the indices. Now, first of all, we've got Action Construct. Action construct, when it started printing new all-time highs, moved around 200% last year, and it's still trending. Another stock that performed extremely well, Bajaj Auto. When this stock broke out and started printing new all-time highs, it moved 61% to its all-time high, around 69, 70%. So again, guys, remember, bear in mind that the Nifty only moved 15%. HBL Power, when this broke out and started printing new all-time highs, it moved almost 300% last year. Okay, Jindal Saw, another stock. Jindal Saw moved 235% last year. Jindal Stainless, this stock, and you can see it's already printing new all-time highs this year. It moved around 170% last year. Just a couple more. I just really want to drum home the point, guys, that you imagine having, what are these? I'm sharing like 5, 6, 7 of these stocks in your portfolio. Imagine just having these in your portfolio, holding them and compounding them. This one is persistent. This moved 45% last year. So again, the Nifty moved 28%. Persistent moved 45%. Rec Limited, a real powerhouse of a stock, Rec Limited. It moved, again, 212% last year. I think I've got just 1 or 2 more. We've got TVS Motor. TVS Motor moved around 73% last year. And now we're back at the Nifty. So guys, you can see what I mean here by you can focus on an index and settle on the index. You can go for undervalued stocks like the Warren Buffett approach and really struggle with letting those stocks gather momentum. Or you can build a portfolio around trending stocks outperforming the market. So this is what happened in India last year. The Indian stock market just went through the roof, and that's set to continue this year. So all of that good work that we did for our community members and the profit that they accumulated, they will only set to hold and compound those stocks further, and the profit they've accumulated will continue to grow. And remember, because we're compounding, it will grow exponentially. It's not a straight line growth. It will grow exponentially over the next 12 months. So what we want to do is we want to apply that same philosophy to the US market. So let's do that. I'm just going to close this. And I'm going to start with the SPY. Okay, so let's open up the S&P 500. And we're going to start with the monthly time frame. By the way, I'm going to go into more detail about what you're seeing here. You're really getting an insight into what the MAT looks like, which is a 4-screen setup where you can do in-depth analysis, and it really tells you where the trends are. But I'm really just going to start on the monthly time frame because that's what we just looked at earlier with the Nifty and the stocks I just looked at, the Indian stocks. So let's start with the monthly time frame. And what I want to do is I want to go back to this period here. Now, this period is the coronavirus. The coronavirus, when the impact of the coronavirus was felt in the stock market, it declined by 30%. So if you take it from the top to the bottom, oh, can't see it properly. Let me just get rid of that, start again. What's happening, guys? All right, let me just bring it over to the side. Okay, there you go. You're looking at around a 35% decline from the high of February to the low of March 2020. Then we had that recovery to the upside. Now, I'm just going to draw this line here because that blue line was the all-time high back in 2020. That high of February 2020, that was the previous all-time high before the coronavirus impact was felt. Then, again, the stock market caught everyone off guard. Everyone was expecting, because of the coronavirus, that the stock market would keep on tanking. What they didn't anticipate was that the stock market would find support, which it did. Look at our support lines, guys. So it's already told you areas where the S&P could have found support, which it did, and then it recovered. Now, not only did it recover to August of 2020 when it started printing new all-time highs, but it then went on to complete a 40% bull run. Once again, when the S&P 500 broke out and started printing new all-time highs. During this period, bearing in mind that the S&P 500 broke out and started printing new all-time highs. So let's consider what we've seen here. We've seen a 35-40% decline in the stock market. We've seen a recovery back to its all-time highs. And then we've seen a 40% bull run, all printing new all-time highs. So going back to the logic of what I said earlier, when the S&P 500, which is an index, is trending and printing new all-time highs, what we want to do, because our job as investors is to find the strongest stocks in the most robust sectors that are outperforming the index, that are trending and outperforming the index. So what I want to share with you are some of the stocks that we invested in during that period. Now, what I want you to keep a close eye on, guys, is you probably won't know what some of these stocks are in terms of their brand names. You may never have even heard of them. I'm based here in the UK. So a lot of these companies that get picked up by the explorers that we've created for Metastock, I've not heard of a good portion of these stocks. So when they come up, I go and look at them and figure out what they're about and do a bit of research into them, but not too much. I just want to get a general overview. So if you are US based, you may have heard of some of these companies, you may not have. A little pro tip here, guys. Wealth is made from stocks that are not in our media channels. If you go online, all you ever hear about are Nvidia, Microsoft, Apple, Netflix, PayPal. You know, the stocks, those brand names, they just want to, all we ever seem to get focused on are FANG stocks and the tech sector. There's 10 other booming sectors that offer excellent opportunities. And so we've got to be able to find those. So TSCO, if you look at this period here, look at this trend to the upside. When the S&P broke out post-coronavirus and started printing new all-time highs, TSCO was a stock we added into our portfolio. It moved 110%. Ashtead Group, which is actually a UK stock, again, picked out by the explorers. This stock moved 150%. Now, here's what you may find interesting. I'm based in the UK, but most of my portfolio is always filled with US stocks because the US market is just wonderful for opportunities. But there are a handful of good UK stocks that I will add into the portfolio. But the logic is exactly the same. That 4 phases that I'm looking for, when the US market is trending and the S&P 500 is trending and I'm adding stocks into the portfolio, I will add some good UK stocks into the portfolio as well. So Ashtead was one of those. Okay, Arthur J. Gallagher. Arthur J. Gallagher, since coronavirus, Arthur J. Gallagher has just gone on and on and on. It's moved 130% since the coronavirus. Deere & Co. This stock was one of the first stocks we added into our portfolio post-coronavirus, and this stock moved 130%. So again, guys, remember, the S&P 500 moved 40%. IDEX Laboratories. Again, another one of the early stocks that we added into our portfolio post-coronavirus. This moved 133%. Now, notice, do you remember when I said, when I was showing you the 4 phases, that typically we hold stocks for 12 to 18 months? That's because after every good trend, which lasts 12 to 18 months, there's usually a period of correction. So you want to cut it out when the correction starts coming in take your profit, and then move to the next set of stocks. And that's how our portfolio is managed. This idea of just holding stocks for life is old school. Buy Facebook and hold it for the next 30 years. No, hold it when it's trending, let go of it when it's consolidating or topping out and dropping like PayPal, and move to the next set of stocks. This isn't an emotional art. We have to remain objective. These stocks don't know who you are, and you don't really care about where these ticker symbols are. What you care about is profit. And so we have to remain objective at all times. Hold stocks when they're trending, cut out of them when they aren't. Okay, McKesson Corporation. Now, this is a stock that last year in 2022, when the S&P 500 fell 28%, McKesson Corporation moved up 80%, 90%. It completely outperformed the S&P. So even during a down year like 2022, if you have good scanners, if you have access to explorers and good software like Metastock, you can find stocks outperforming the index. Because what happened at the end of 2021, when money started leaving all the tech stocks, where did the money go to? Well, the money flowed into healthcare, it flowed into energy. So stocks like McKesson Corporation performed very, very well. ABC, AmerisourceBergen, I believe it's called Kincora now, ticker symbol COR, another stock that performed very, very well for us in 2022. Now, if you have a look at McKesson Corporation, it's now moved 130%. This is still in our portfolio. Microsoft, a real steady Eddie. I mean, look, it's a beautiful stock. I mean, post-coronavirus, Metastock, Microsoft moved 83%. Now, here's a good example, guys, of Microsoft now back in our portfolio. Phase 1, Phase 2, Phase 3, and now Phase 4 is what we're waiting for it to unfold. So Microsoft is in our portfolio. And so this is the time now to be adding all of these stocks that are breaking out and printing new all-time highs. Why? Because the indices are doing that. The Nasdaq's already printing new highs. The Dow Jones is already printing new highs. We're just waiting for the S&P 500 to follow. Once they're all aligned, the stock market will shoot ahead and we will have these trends that we had post-coronavirus. Microsoft is a good example of that. But post-coronavirus, it moved 83, 84%. NVIDIA Corporation. Again, I mean, NVIDIA Corporation, I've had it in my portfolio since 2016. And it's gone through a stock split since. I mean, but look at where it is now, guys. After its stock split, printing new all-time highs, $550. Again, phase 1, phase 2, phase 3, it's now in phase 4. We've been holding NVIDIA for quite a while. It's one of those rare stocks that we entered below its all-time high just because we know how well it's performed in the past. We've been holding NVIDIA since last year. But now it's trending. This has the potential to move to $1,000. And people will often say, well, you know, that's impossible. Well, no. Look at Amazon. Look at LVM. I've forgotten the ticker symbol, but Louis Vuitton, the guy that owns Louis Vuitton, that whole group, that stock is over $1,000. So never underestimate how far a stock can go. And this is where opinions will let you down. Don't form opinions. Buy the stock. Let it tell you. Because ultimately, if you buy a stock at $500, exit at $600, but then 12 months later, it's at $2,000, your job as an investor is to maximize profit. You can't buy a stock at $500, exit at $600, and then pretend that you're happy with the profit. You're going to be kicking yourself if that stock is at $1,000, $2,000, 12 months down the line. So remove yourself from the investing and from the opinion game, and instead enter the following game, the trend following game. That is where the real wealth is. It's less work for more profit. Okay, final one, ODFL. Again, a stock that performed very, very well for us post-coronavirus. And you can see that it moved 150%, 160% post-coronavirus. Look at what it's doing now. It's gone through its phase. So that's your phase one. We exited when phase two started coming in. We allowed phase two to happen. It's still going through phase two. When it enters phase three, which will be a breakout and new all-time highs, and then phase four, we'll start taking positions. But while this is setting up, I don't need to worry about it because I've got all these other stocks that are already in phase four. So why do I need to focus on ODFL when I've got stocks already in phase four in our portfolio? And I'll show you that in a second. Okay, so there you have it, guys. That is what happened in the Indian stock market last year. We went through that. Let's just have a little summary. We've gone through what happened with the Nifty and the Indian stock market last year, and we looked at all of those stocks that moved 100 to 200% plus last year. We've now just gone back a little bit, looked at the S&P 500, looked at that bull run, that 40% bull run in 2020 through to 2021. And we just looked at a whole bunch of stocks in my portfolio that were in my portfolio, like ODFL, we have on our screen here, that all outperformed the index. Okay, so now.
Zaheer?
Yes.
I'm not sure if this is the best time to interject here, but.
Please, it's always a good time. Is there a question?
Yeah, so Mustafa, he actually made this comment earlier towards the beginning, but he wanted to ask if there's a chance you can review a Saudi stock. He says he already has purchased your system, and he identified a security in the Saudi market from the scanner, and he wants to know if you could take a look at some point.
Okay, excellent. Okay, I'm not too familiar with the Saudi market, so should we do a little search?
Yeah, so if you just click on the chart, then you can type in 1214.se.
1214.se.
Yep. And then just hit enter.
Okay, should something be coming up? I've got a window here, but I can't see anything in the actual.
Try hitting enter and we'll see if it works.
Oh, brilliant. Okay. Shaker?
Yes, I believe that's the correct one.
Okay. Thanks, Mustafa, for the question. Now, this is exactly what I mean, guys. This is a really, really good example of the kind of stock that I personally, as a trend follower, would not invest in. Why? Because the overall direction of the market is down. And what I mean by that is if you look at the all-time highs from 2014, then we've got this peak here from 2021, and then we've got the current peak for 2024. So the overall direction of the market is down. So what you're looking at here is a stock that requires a lot of work for it to start pushing to the upside. Now, of course, we're looking at this in real time. In 12 months down the line, this stock could be printing new all-time highs. But there's a lot of work for it to do. It's got to break through this level of resistance. It could come to this level of resistance from 2021 and start working its way back to the downside. It could come back to the all-time high and start working its way back to the downside. So these sort of stocks, these sort of undervalued stocks, this isn't my preference, just because it seems like there's always a lot of work for the stock to do before it actually starts generating profit. Now, you may be taking dividends into consideration, so the dividend payout may be part of your strategy. Fine, that's not a problem. What I would say is that have one portfolio around these sort of undervalued stocks, have another portfolio around the trending stocks that I'm highlighting, run those side by side over 12 months, 18 months, 24 months, and then have a much clearer picture of what performs better. But my personal approach, Shaker, if I'm saying it correctly, is not one that would be in my portfolio.
Okay, thanks, Zaheer. And I maybe want to comment on that just a little bit further for Mustafa, because he said that he had identified this with the scanner. And just looking at this is a monthly chart. You can see in 2023, that year alone, it's maybe been trending upwards a little bit, but this is why it's so important to do your further analysis with this system to look at the historical data and to see in the
long absolutely term. So I know what Mustafa has done. So basically, Mustafa has done a breakout scan, most likely, and the scanner will have picked out the breakout. You can see that there's a signal here. The bars are blue. So there's a scanner. There's a signal saying that a breakout happened. Now, yes, a breakout has happened because it is trending. And remember, breakouts happen in the trend. It's then our job, as Bobby has just said, to go in and do further analysis. Now, how that further analysis looks depends on your approach. For me, my further analysis is then looking at that 4-phase sequence. Phase 1, phase 2, phase 3, phase 4. So if this stock was picked up by our scanners, I would then go straight to the monthly time frame and I would look at it and go, well, this doesn't meet my phase 1, phase 2, phase 3, phase 4 criteria. I'm going to dismiss it. That's how I would do it. I hope that helps.
Yeah, he says thank you, and that's clear.
Brilliant. Fantastic. Okay, so let's, I'm just going to close this down. And I am now going to open I want to start with the SPY first because I want to look at what's happening with the SPY right now. So I'm just going to go back to the monthly time frame. So guys, this is that decline around coronavirus. This is that bull run. Now look at what's happening right now. The pattern is repeating itself. Now, not as aggressively because, you know, coronavirus was a black swan event. What we saw in 2022 and the recovery through 2023, that was a more natural decline and recovery in the stock market. It wasn't fueled by a black swan event. So what we had was a very slow decline, 28% decline from the high of 2022 to the low of October 2022. Now, it was here. If you go back, for any of you guys who follow me on social media and on LinkedIn, it was here in October. I said that, guys, we could start seeing the recovery at this point. And the only reason for that was because if you go to the weekly time frame, the weekly 200 SMA was acting as a level of support. And if you go back to 2010, the black line, the 200 simple moving average, that has been acting as a trampoline. Sorry, it's a little bit clustered. You may not be able to see it because there's a few other indicators on there. But the black line, the 200 SMA, since 2011 has been acting as a trampoline. Every time the S&P has come to it, it's bounced off it. Ignore the coronavirus. You can see here, that's that black swan event. But the natural sort of declines have been coming to the 200 SMA and bouncing. And that's what I said in my social media. I said, there's a very good chance that the S&P is going to recover from this point. And that's exactly what happened. And this goes back to what I was saying at the start of last year when we had that talk about failing banks. I said to everyone, ignore that, because the market does what the market does. The stock market is disconnected. Wall Street is disconnected from the high street. I don't know if you have this term in the US. We call it the high street. The high street is our local shopping center, the road with all the local amenities on there, with our banks and grocery stores and post offices and stuff like that. We call that our high street. So my expression, I actually picked this up from a gentleman called Andrew Craig. Wall Street is disconnected from the high street. What we see and hear and are told in our media channels is very far from the truth in terms of what happens in Wall Street. Excuse me, guys, 1 second. The stock market can and will rally despite what the media is telling us. And so all of last year, the media was telling us that the stock market is going to crash. Instead, it caught everyone by surprise, not us trend followers. It caught everyone else by surprise. And we then had this 35% run to the upside. Now, look at where we are, guys. We are close to printing new all-time highs. Now, there are people out there who are saying, well, it could do a double top and it could crash. A double top is when the stock market comes to a previous high, tags that high, and then starts declining. Okay, yes, it could do that. But the likelihood of that happening is far less than the S&P breaking through and printing new all-time highs. So we are seeing the same pattern that happened post-coronavirus. So if the S&P, or when the S&P follows the NASDAQ and the Dow Jones and starts printing new all-time highs, that is when you want to go to town as investors and start picking off these good stocks. Now, here's the thing, guys. If the market fails, so what? That's where risk management and exit management come in. You never want to be risking more than 1% a stock or 2% a stock. So if it fails, you lose 1 or 2%. Losses are part and parcel of the process. If you can't stomach losses, you shouldn't be in this game. You should be putting your money in a tracker fund or putting your money into something else that, where you can swallow the losses. But risk management is not something to be feared. It's something to be understood. When you understand risk management, it's simply a game of keeping your losses small and your winners big. And you will still have losses because there's still volatility. It's the volatility, even in winning stocks, that scares people. So when the S&P 500 breaks out, you don't start chucking all your money into 1 or 2 stocks. You manage your risk. You put 1% here, 1% here, 1% here, 1% here. You cut out of losers, so your losses are only 1% per stock. But when you hold and you compound those winning stocks, guys, and I've just shown you a plethora of them in the Indian market, in the US market, in the UK market. And we've already got those stocks trending right now. I'm going to show you them. Those stocks that do go on to return you 5%, 10% each over 12 months. And if you have 10, 15, 20 of them in your portfolio, that's how you will smash through your wealth goals. So this is where we are right now, guys. We want to wait for the S&P 500 to break out. Now, as I said, we're already long on the stock market. We're already, because we enter, when the S&P 500 is bullish, according to our trend filter, you can see here, we've got periods of green, gray, and red. When the trend filter is green, that's when we start buying into the stock market. We can be a little bit more aggressive, but generally when the stock market is green, that's when we start buying into the stock market. And the trend filter started turning green here on the weekly time frame in April. We actually started entering a little bit earlier. It was February. It was around this level where we started entering, just based on our trading plan. But for the more conservative, you wait for the trading plan, the trend filter to turn green, and you can see how well it's performed. So we've actually been buying into the stock market since last year. All I'm saying is that when the S&P 500 breaks out, these stocks will steam ahead, full speed. And that's, if you think 2023 caught people off guard, wait till the stocks in 2024 catch people off guard. They won't have a clue what to do, because generally people don't know what to do anyway. But when they start seeing these opportunities pass them by, FOMO starts kicking in, and they then start making silly decisions. We don't want that. We want to be prepared now with a good trading plan, a good risk management plan, and we want to execute that impeccably. So I'm just going to close this down, and I just want to go through some of the stocks that we already have in our portfolio. And again, note some of the names, guys. Some of these stocks you probably have not heard of. Again, as I said, if you're based in the US, you may already have heard of them. Me being based here in the UK, a lot of these stocks are often new. And then when I see these stocks, I think to myself, my God, these stocks are amazing. Like, how have we never heard of these stocks? You will never hear of these stocks if you don't have a scanner like Metastock that's programmed to pick out these stocks for you. I mean, look, one of them is BWX Technologies. Look at its history, guys, 2010 to 2018. This is a massive run. You're looking at a run of 220%. So that's phase 1. Phase 2 is this consolidation. It's now entering phase 3 and phase 4. So it's right at the base of the next 200 potential bull run. This is in our portfolio. Right, next one, CBOE. Now, CBOE has actually been in our portfolio since last year, and I've talked about CBOE in the past. But again, if we just look at its performance, phase 1, 100% run to the upside. I mean, you could even go further back. If we go further back to this point here, you're looking at a 370% return run to the upside. Phase 2 is this consolidation base. Phase 3, and then phase 4. Now, we've been holding this stock since August of last year, and it's moved roughly 20% so far. Going through a bit of a correction, but that's okay. That's how trends are. Move, create a consolidation, looking for the next base. So this is one in our portfolio. We're just looking to hold and compound this further as it moves up. Now, ELF. Elf Beauty. I don't know if you guys are even familiar with this. I wasn't familiar with this stock, but I mean, look at what it did last year, guys. It moved 330% last year. Remember, the S&P only moved 30%. Elf Beauty moved 325%. Went through its, that's your phase 1, phase 2, phase 3, and phase 4. We entered Elf into our portfolio this week. We're looking for this to potentially do another massive run to the upside. It's around $150. This could easily reach $300 over the next 12 months. ITT, again, not a stock that I was familiar with, a slightly bumpier stock, but if you go back in its history, it's got some very, very good periods of trend. You've got a period of trend here where it moved 90%. You've got another period of trend here where it moved 150%. What we're looking at is the fact that it's now broken out, printing new all-time highs. It's a cheap stock. I think we've got 2 or 3 positions running on this stock already. Since it broke out and started printing new all-time highs, this stock has moved 13%. So it's already starting to perform well for us. Marriott, as in the hotel guys. I mean, Marriott is a stock that was in my portfolio back between 2013 and 2016. It's not been in my portfolio since. So again, it's an example of how objective I remain with stocks. I don't care about the brand name. I don't care about the fact that it's a famous hotel chain. I'm not bothered about that. All I care about is what is the stock doing and is it ready to set up? But if you look at this run, it moved 220% between 2013 and 2017, 2018. A very good stock. Since then, it's been very bumpy, very jerky, but it's now meeting my criteria. Good performance, phase 1, a very messy phase 2. But look how long it is, guys. Remember what I said, the longer the consolidation, the bigger the breakout. It's now broken out. And since it's broken out and printed new all-time highs, it's still early days, but it's moved around 7%. So this is in our portfolio. Relics. Again, look at its history, guys. I mean, you can't dispute its performance. I mean, imagine if you just bought this stock. This is what I'm talking about. This is not a stock that was undervalued back in 2012. Back in 2012, this is a stock that broke out from consolidation and started printing new all-time highs. And look how far it has moved since it's done that. It's moved, oops, sorry, you can't see it. Let me go back to it. It's moved 260%. And that's not even me drawing that line very accurately. I mean, if you do it accurately, you're looking at 350%. So these are the kind of stocks you want in your portfolio. And since printing new all-time highs, it's moved 16%. We've got a number of positions on this stock already. RSG is another stock in our portfolio that's performing very well. Visa, another stock. Look at its history, guys. So it's now setting up, the stock market is now setting up for the next round of trends. And so your job is to find these stocks and invest in them. So how do we do that? Sorry, I have gone on a little bit but in terms of finding these stocks, but I just really got to drum home with the opportunities that are presenting themselves. First of all, the system that we use, Explore. We have created a number of explorers. You can see everything where it says MAT. We've created a huge number of explorers for you to scan the market. Some for low to mid cap markets, so the UK market and the Indian market, for example, and then for the high cap markets like the US market, the large cap markets like the US market. We've got explorers to scan for breakouts, and we've got explorers to scan for pullbacks. So we've created explorers for every possible scenario. Once the scanners create a list of stocks, so let's say they scan through over 20,000 assets, they will then give you an initial short list, let's say of 200 to 300 stocks for you to look through that meets the criteria that I've gone through: phase 1, phase 2, phase 3, phase 4. Now, we made this really simple for you. I mean, to add on, the capability of Metastock is unbelievable. Compared to a lot of other software that I've used, the capability of Metastock is fascinating. First of all, if you look at the bottom, there's a ribbon. There's a certain criteria that we want every stock to meet. When the criteria is met, the ribbon will turn green at the bottom. You can see, for example, Visa. On the monthly, it's green. On the weekly, the criteria is met. The ribbon is green, it's bullish. On the daily, in the bottom left, the criteria is met, it's bullish. So when the criteria is met across those 3 timeframes, Metastock will tell you by bringing up these ribbons to say, hey, you may want to take this stock into consideration. Of course, there's a bit of manual involvement here where you're looking at that phase 1, phase 2, phase 3, and 4 phases. But ultimately, Metastock is aligning with you and saying, look, this is a stock to take into consideration. Now, along with each time frame, we've created expert commentary explaining what is happening on each time frame. So the commentary is all there as well to say, hey, this is a good stock and this is why, or it isn't a good stock and this is why. So there's all in there. The indicators, the expert advisors that we've created, they've all been aligned to make it very, very simple for you to scan the market through the explorers, bring the results of the scan into this 4-screen setup, and then quickly analyze each of those stocks. Then we go to so that's the monthly in the top left, the weekly in the top right, the daily in the bottom left. Those are our analysis time frames. When they're all aligned with the ribbon telling you that the stock is bullish and that the indicators are all aligned, this is a stock to consider. We then go to the daily in the bottom right. The daily in the bottom right, first of all, the bars turn blue when this is a high probability setup. So you can see that Visa has actually been trending according to our criteria since November of last year. When it sort of falls out of sync a little bit, it loses the blue, but that's because this is a breakout page. So when the blue disappears, it's telling you that you may want to go to the pullback page, because the pullback page is where there may be a potential pullback entry. Now, you've got all the entry points as well, the little diamonds telling you when the breakouts are happening and the criteria is met. And with each breakout, you've got an entry point, stop loss, and a risk-free level. You've also got other custom indicators here at the bottom telling you the quality of breakouts. So if it's a green bar, that's a high quality, high probability breakout. If it's a red, it's a low probability breakout in a bull trend, but a high probability breakout in a bear trend. And the gray bars are neutral. So there's help and guidance every step of the way. And here's the final point about this, guys, is that the risk-free level is not a level where you take your profit, which is where a lot of people make mistakes. When you enter this stock, you can see that Visa now, we entered at this level, it's now moved into profit. If it reaches this level, this is where you want to start compounding and buying more of the stock. This isn't a day trading in and out philosophy, which very rarely works. This is a wealth creation approach. So there you have it, guys. The MAT, the Market Advantage Toolkit, not only will it scan and find the stocks for you, but it will help you analyze and shortlist the best stocks. Once you've done that, it will give you entry points, stop losses, risk-free levels, where you can then take those values, put them into your broker account. So all the guesswork is completely removed. And this is a complete system from scanning all the way through to exiting and managing and rebalancing your portfolio. Okay, I'm just conscious of time. I'm almost done, guys. I'm just going to move back to my charts. Excuse me. Stop sharing. Give me 1 second, guys. Okay, so you should be able to see my screen. So I'm just going to quickly finish up on the final slides. Right, so the Market Advantage Toolkit, what do you get? You get your 16 explorations, your 16 expert advisors, your 11 bespoke indicators, 11 templates, detailed manual explaining everything. It's a wonderful manual, actually. William, who's part of the Metastock team has done a phenomenal job helping me put this all together, including the creation of the tools and the commentary. It's a phenomenal job. And on top of that, guys, you get support structure from Sublime Trading, that's us, as well as Metastock, which includes a private community for all Market Advantage Toolkit members. So within that community, you get a further video syllabus explaining how the toolkit works. And we're in that community every single day, helping you understand how to use it, and also sharing the stocks that are coming up. So Marriott, when we entered it, I put it in the community. Visa, when we entered it, I put it in the community. So there's a lot of support that goes into, you're not just buying this toolkit and left on your own. We're actually there to help you all the way through this community that we've created. Now, what I wanted to do, guys, is just to summarize with the overall plan for 2024 and how that will be empowered by the Market Advantage Toolkit. Well, first of all, step one, use the explorers to scan for the strongest stocks from the most robust sectors. Step two, use the 4-screen setup. Those are the tools, the expert advisors, and the commentary to shortlist the very best stocks, put them into tier A and tier B. Tier A, that are the stocks you want to take. Tier B are your watch list stocks. Step three, create the risk management framework. This is actually very simple. What is it you're going to be risking per stock? And what is your max risk allocation? Typically 2% per position. Use the daily time frame in the bottom right to place positions into your broker accounts or your entry points, your stop losses. All of that guesswork is removed for you. The values are there. And also, guys, the entry and the stop losses, the formulas behind them, it's all explained. This isn't a black box system. You're not blindly following along. The formulas, the algorithms, everything is fully explained. Move them into your broker account. Place a set of positions, e.g. 10 stocks. If you're risking 2% per position and you take 10 stocks, you know exactly how much you're set to lose, which is 20%. Maybe you want to do 1% per position. So if they all fail, you'll lose 10%. But as I've already highlighted, when the indices are aligned and you build your portfolio strategically over time, you're not going to be faced with huge losses. It's a case of keeping losses small and your profit much larger. Cut out of losers with a small loss. You've got the stop loss in every position. Strategically hold and compound winners only. Use the trailing stop loss in the daily bottom right to manage positions. So in the daily bottom right as well, there's a trading stop loss for every position that beautifully manages a stock over 12 to 18 months. So you're not going to get stopped out prematurely. It's all there for you. You just need to take those values, put them into your broker account, and then take profit and rebalance every 12 to 18 months. Repeat the process, stay objective. So just to end up with, guys, typically we are going to be charging $199 a month for the Market Advantage Toolkit, but this is a new offering. We only went live at the end of last year. We still want our pioneers on there. It's already being snapped up. We've got a wonderful number of members in our community. So we still have the offer at the start of 2024 for $99 a month. This is a lifetime offer, guys. So if we do move up, and when we do move up to $199 plus a month, I mean, this is a $20,000, $30,000 product easily, given the amount of time and effort that's gone into it. There's like 25 years of combined experience and time of myself and my co-founder that's gone into this. And there is no other product out there that is so complete for retail investors. So at $99 a month, guys, it's a steal. But we want you in. We want you in our community. We want you guys to use it. We want to train you up so you guys can go away and tell other people how wonderful this product is. So there we are, guys. I'm going to leave it here. $99 a month for everything that I've covered today. Metastock will be on hand to onboard you if you decide to move forward with this. Over to you, Bobby.
All right. Yeah. Thank you, Zaheer. Let me see.
Guys, just a little apologies. Again, if I was coughing and sniffling away, apologies for that. But we got there in the end.
Oh, yeah, we got there. And it really wasn't bad at all. You did a great job. You sounded good throughout, I'd say. Yeah, guys. So just to recap, I mean, a little bit, he already shared this, but I also wanted to let you guys know that we have a team available here at Metastock that can help answer any additional questions that you might have. And they're available right now. If you wanted to chat in at metastock.com/sales chat, they can help answer additional questions for you, maybe talk to you about your specific market or wants or needs. We also have a couple versions of Metastock that are available, and they can review those with you too. Let me see here. It looks like we might have had a couple of questions come in, so I'm going to look at those real quick. Looks like Will just had some comments. Yeah, I'm not sure if you saw those, Zaheer, that they look like they're mostly just comments kind of to you. He likes the Dennis shout outs that you gave. He says he worked with Richard Dennis for many years, actually. And had
wow, fantastic.
Turtle training classes. Yeah, fantastic. Let me also just check YouTube, see if we had any other questions come in through there. I'm not seeing additional questions in there, just some thank yous and some hellos and everything like that. I guess so to reiterate this too, guys, if you are watching this in like a go-to webinar, you can also come back and watch the recording later. We have that available on our YouTube channel, just youtube.com/Metastock. You can also go to the link that I have up on the page, metastock.com/Sublime X, and that's going to take you to a page that showcases a little bit more about the system. Oh, I thought I had it pulled up here. I guess not, but that's okay. You could visit there to sign up for this offer, get the $99 a month deal. Also, if you needed to get Metastock as well, we can go over those options with you and help you with that too. Something else I really like to reiterate, Zaheer kind of touched on this a little bit, but we have a fantastic support team here over at Metastock. It's something we're very well known for. And with for every single client that we have that gets our service, whether they add the Market Advantage Toolkit to that or not, we offer a free white glove setup and installation service. We'll help you get everything installed, kind of set everything within the software to your desired kind of standards and settings if you only want to be viewing certain markets or things of that nature. And not only will we do that for you, but we'll do a demo on the platform too. We'll kind of show you how to use all these tools. So give you the ins and outs of utilizing all the Metastock tools. And then we've also did a multiple hour session boot camp with Zaheer, where he really went in depth showing how everything works with the Market Advantage Toolkit, really just an in-depth, fantastic training. And that's going to be available to you for free as well, along with additional recorded trainings and things like that we have just on the Metastock service. So if you're nervous about, kind of getting your feet wet or things of that nature, don't worry. We're going to take care of you every step of the way. I see another question just came in. Will a recording be available? Yes. So you can access that, again, either by going to our YouTube. So youtube.com/Metastock. You'll see right here, it's currently a live video, but it'll show up as one of the videos just under our video list here. So you can catch the recording there on our YouTube. And then just to touch in on this again too, if you don't have Metastock now, we can give you a trial. Or if you need Metastock, you can get a package starting at just $59 a month. That's going to include our Metastock daily chart software with the end of day data that you need. Or if you're interested in our real-time platform and getting additional news and fundamental services that we didn't touch on today, you can get Metastock real-time for that intraday data and the additional news service starting at just $210 a month. And we can help you get a trial of that. I also included a link for getting just a trial of that, the metastock.com/Sublime 3-for-1. But really, yeah, if you're interested in the complete Market Advantage Toolkit, I mean, you cannot beat that $99 a month. That's half price of what we're normally going to be setting the rate at once things are even further established, but we already have everything ready for you. We also have, for a limited time offer, a lifetime purchase option available for you guys. We wanted to allow people to also be able to do that if you're not a subscription type of guy, so that you don't have to, pay for this in through retirement and on and on. And it's just a $10,000 lifetime purchase, considering it normally costs over $2,000 a year. That's a really good option for those of you that are not subscription friendly. We also have the purchase options available on Metastock too, just to put that out there. But I think that's going to cover everything I don't see any other questions coming in. I see some Happy New Year's. So Happy New Year to you all as well. And thanks so much for attending another session with us. We're going to be promoting here in the next couple of weeks a online traders summit, an international online traders summit that's going to be on January 29th. It's not quite officially announced and released yet, but Zaheer is going to be a part of that as well. So keep an eye on your inbox if you guys are interested in seeing his next demonstration with us. And if you want to see some other market speakers with us, we're going to have that going on January 29th. And you can keep an eye on metastock.com as well. And we'll be adding that to our events page very soon. But I think that covers everything. So everyone, enjoy the rest of your nights or morning or whatever it may be where you are. And thanks for joining. We'll see you next time.
Cheers, guys.
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us and keep on trading.